Welcome to Chit Chat Stocks, a podcast that helps you discover your next great investment. I'm one of your hosts, Ryan Henderson, and I am joined, as always, by the one and only Brett Schaefer. Today, we've got our weekly Power Hour episode where we talk all things financial markets, and it is earnings season. So, we've got plenty to discuss. Microsoft just reported an hour ago, as of this recording. Meta reported, Tesla reported. This might be the biggest day for the quarter, actually. But yes, we do these live every Thursday at 5 p.m. Eastern Time on YouTube. So if you ever want to ask us any questions, head on over to Chit Chat Stocks on YouTube. And at 5 o'clock Eastern Time on Thursdays, we'll be going live. So you can ask us any questions in the comments. Brett, where do we want to start?
Well, did you say that this one was Wednesday? I was doing some work putting up our thumbnail. This one we
I
are doing Wednesday, so it is a
forgot.
day before. But it's how about our rule? 90% of them are on Thursdays, and then if we have something in our schedule, it'll be Wednesday at the same time. Either way, it comes out early Friday morning East Coast time.
But
Let's
always
talk
published to the
Microsoft
podcast players on Fridays, just so
on
everyone
Fridays
knows.
for
Same
the
time.
podcast players.
Yeah.
Yes. Let's talk Microsoft. There's just so many earnings to go through. I do want to save time though for at the end of the episode, maybe Burry's, I don't even know how to describe it, intricate pitch for GameStop. It was kind of out of the blue, very, very surprising read, as well as what's happening in gold, silver, and the devaluing of the dollar. But before we get to all those, we have so many earnings to discuss. Ryan, what happened to Microsoft? I didn't even look. I'm seeing you have a chart here. Your friends, your team at Fiscal AI updated it. The CapEx is literally going off the chart that you have on my screen here.
Just about. Yeah. Yeah, it was a bit of a bizarre quarter for Microsoft, kind of a mixed bag. The I should give a shout out to Fiscal AI because the numbers were up really quick today. So if you're someone that likes to watch earnings very closely and pour through all the numbers like immediately after, I know that not everyone does that, but some of us do. Uh, Fiscal AI is a super helpful tool for it. If we go by segment, it looked pretty good across the board. So Azure, which seems to drive most of the business, grew 39% year over year. That's Azure and other cloud services is what they group it as. Microsoft 365 Consumer up 29%. Microsoft Commercial up 17%. LinkedIn up 11. Dynamics 365, which admittedly I don't know that business super well, up 19%. Windows up 1%. Xbox minus 5. So Xbox is the only business for them, only segment that wasn't growing. I gotta say, Bobby Kotick over at Activision timed that departure perfectly, selling to Xbox. I think they Microsoft might have got left with a bag there.
Yeah, the Moneyball, as they say, right? He's one of the the most surprising acting role I think I've ever heard in my life. Do you remember this, Ryan? Are
He was
you
in
vaguely
Moneyball?
familiar? Yeah, he was the owner of the Oakland A's.
Really?
Uh,
That's
Yeah,
right.
absolutely fascinating. Him and Brad Pitt chopping it up in the acting room. That is, and he was good. He was good at his job. But yes, I agree. Bobby Kotick, a lot of people have poor opinions of, but as a capital allocator and timing the market, quite good. And it might be time for Microsoft to, I'd say, just maybe get rid of this thing, sell it.
I know it just kind of treads water, and I don't know. I just imagine it's a bit of a drag on costs because I don't know. I've been in and out of the gaming industry as an investor probably for the better part of the last 5 years, and hyper competitive. Xbox is kind of, I don't want to say in no man's land, but they've got some. You would think it's a better business than it is. That's probably how I'll leave things. But the thing that stood out here was there must have been, I don't know if this was one transaction with OpenAI or what exactly happened here, but the commercial remaining performance obligations, which is basically their cloud backlog, grew from $392 billion to $625 billion quarter over quarter. So it grew 110% compared to last year. This is like what we saw with Oracle. where it's basically just one big commitment. I'm guessing from a single customer. It's got to be OpenAI. I don't know who else would commit to that.
Who else would commit? Yeah, that audacious number. I will say there was an article. These are developing here. I saw either earlier this week. It was probably late last week that Altman was in the desert. I think we talked about this on the show. Trying to raise money, trying to raise $50 billion from some of the Gulf states. And we'll say also at the same time, Saudi Arabia is trying to raise funds from other Gulf states because they're. Do you remember that those projects I would follow for kind of a joke segment? The line, the resorts, the futuristic,
Oh,
the skyscraper that was going to be 30 miles long. Yeah, it
yeah.
turns out that hasn't worked out, and they might need some money. But Altman, I guess, is not getting what he wants there, and he I don't know who dropped it, but there was an article in the Wall Street Journal that SoftBank is in talks to invest 30 billion more dollars into OpenAI. So, second choice to the Gulf states, but maybe Masa's son will. It feels like a very Adam Newman move again. We've mentioned that, but that's where these commitments come from. If those don't come through, these remaining performance obligations, eh, I mean, are worthless.
Yeah. And I think they are like most people. I don't think that's what most analysts care about for the business. I mean, the
Fair.
cloud growth is good, and they have real earnings to show for. So it's not like Microsoft's just clinging to this, and it's Microsoft didn't. It's not like they bragged about this. Like Oracle,
Different than Oracle. Yeah.
yeah, this was just kind of an accounting have to, I guess. Like if you get that much of a commitment from OpenAI, you have to put it somewhere, and I guess it belongs in your commercial remaining performance obligations. But the part that caught me off guard, and it seems like caught analysts off guard as well, CapEx grew 89% year over year. So, and maybe you can share the chart, but for anyone listening, it's basically here are the quarterly CapEx figures for Microsoft for the last 2 years. 11 billion, 14 billion, 15, 16 billion, 17 billion, 17 billion, 19 billion, 30 billion this quarter. So just a massive quarter over quarter jump. I don't know. I got to listen to the conference call because I don't know what happened. I don't know what caused this, but investors seem to be souring on the capex plans a little bit because the stock was down after hours despite beating sort of across the board on the top and bottom line. Is this the like a memory chip supply shortage? I've heard that
No,
that's
no, bro.
causing a lot of increase in capex budgets.
Oh, okay. Maybe that could be incremental. I would, yeah, I would be curious what the dollar amount is versus like, all right, the same time a year ago, what was the same like per data center or per maybe I don't wanna how you describe a unit of chip capacity or something like that or per supercomputer, however you want to describe it. Maybe that is going up, and we have, as you're right, we have seen memory prices rise. I think maybe this is one of those moments where investors are going, all right, that ROIC better show up. These are some large numbers because, man, that revenue on the back end better be there. And there is nervousness around OpenAI burning so much money every year. I think compared to Amazon and Alphabet, Microsoft is in a little trickier of a situation where they can put in a bunch of capex. OpenAI, sure, is the dominant player today in usage, but their losses are nothing to sneeze at, and the projected losses are nothing to sneeze at. So if things go wrong, Microsoft could see quite a bit of an overbuild, I would guess, and that's maybe what investors are thinking about. Hey, whoa, $30 billion a quarter. That is quite large, and I don't know if you put it again. This happened an hour before we're recording, so we're trying to get all the information as quickly as possible. I believe Meta is guiding for well over $100 billion in capex this year. So the competition is going to continue, and I could just see investors get nervous about that.
It is. I mean, the music keeps playing for the AI infrastructure
Yeah.
theme, like in investment theme. If you own memory chip stocks, if you own hell, Nvidia, some of the other players too. Any of the ancillary ones that like provide uh, sort of the picks and shovels providers for the infrastructure, so like Amphenol, stuff like that. You're like, as long as CapEx forecasts continue to increase each quarter, I think the music will keep playing.
That is the music right there. Yeah,
Yeah.
that is playing the music. We have. Thank you for the comment there. I don't know why it didn't respond there, but I wanted to say thank you. Don't know who was commenting, but they said the guide for Meta was 115 billion to 135 billion dollars for 2026. That is a huge jump, especially because they don't have a third-party cloud service.
Yeah. Now, I will say the advertising growth for Meta is really strong. The like ad impressions grew 18% year over year on top of pretty good ad impressions growth last year. This is it's it kind of shocks me how much ad impressions can grow for Meta every quarter because and maybe this is a testament to their platforms that the ads have almost become like just like integrated with the experience, but it feels like a heavy ad load to begin with, and they're still finding new places to deploy these ads. Part of that is the people on their platforms continue to grow. So daily active people still growing 7% year over year, which just boggles my mind. They're at almost 4
Yeah,
billion people. So
the a lot of those are very at this point are very how should I say it, not valuable people as they're the kind of lower end of the GDP per capita areas, lower end of the income per capita areas that are just getting their smartphones. But I agree. I mean, they're still growing. That's one of the areas I guess I've never really spent any time on Instagram, so I don't know with any personal experience what like how it works, but it
what
feels like perfect place to have advertisements. And at some point you go, oh, there's too much ad load, but they keep optimizing that algo, and I guess this is where the return on that capex is coming. But you mentioned here they're seeing a big contraction in margins. What were exactly the figures there? Do we have those on fiscal yet, or is that something that
they should be
might
up
take a
there
little
already,
longer?
yeah.
All right, let me check. Are you talking gross or operating?
Operating for sure. I assume gross margins contracted a little bit too. Headcount grew a little bit, but it shouldn't have been. I think headcount only grew like 6% year over year, whereas revenue is growing 24%. So I'm not 100% sure what that is there. Maybe it's the depreciation of all this capex, but we'll see.
Well, okay, so I think if we look at the margin, it's kind of been normalized at 41%, but last quarter, or sorry, last year in the same quarter was at 48%. So year over year, it's down a lot, but it's been around the 40% range since September 2023.
It is, I think, of all the CEOs, the last one to throw in the towel on capex plans would be Mark Zuckerberg. Like
Yeah, they're still spending. Reality Labs' losses are still growing.
if everyone want like let's say a year down the road, all the big tech companies say, "Shoot, we overbuilt." Meta's going to be the last one to admit it, I think,
We have a
and
comment that says 115 billion is larger than their operating cash flow, or close to it.
that's insane. That yeah, that's truly insane. It this here's the thing for like Microsoft. Let's go back to Microsoft for example. I guess Meta, at least they have a very good gauge on like consumer demand because they're building it for their own applications. Whereas, although I will say they don't know what usage is going to be like for Llama, so maybe they are grossly overestimating their like model usage. But
I would project low.
yeah, Microsoft TSMC reported last week, and they talked about how much attention they are paying to true customer demand. Like they're going to the customers, making sure that the AI is improving their businesses, and it's worthwhile for them to keep increasing capacity. I wonder if Microsoft's kind of just thinking, well, we see strong demand everywhere. Let's just increase. Let's spend as much as we can to increase capacity, and we'll fill it up somewhere. Whether it's OpenAI, whether it's our own services.
What
I
happens if everyone thinks that though?
I know, and I can't. I could totally be wrong. I'm sure they've done more analysis than I'm talking about here, but God, why can't they just add capacity slowly? They're afraid they're going to miss
Slowly.
out on the race to AI greatness.
I'm sure OpenAI wants more capacity. I'm not exactly sure on that front. I would think if you're OpenAI though, you should. And this puts you in a tough position competing with Alphabet. Wouldn't you want to raise prices on your heavy usage tiers? But then you maybe people switch to Gemini. I'm not exactly sure. It's a tough position because everyone kind of has knives out and they're getting very defensive, but they have to go on the attack. I, I think you understand what I mean. No, the fact that everyone's going full in here makes it tougher for everyone else.
Yeah,
And it really starts with OpenAI. And the company in the most difficult position is probably TSMC because they have to contract and predict on a multi-year period on what their CapEx is going to be. Because if they start constructing a factory now, it will be ready in 2 to 3 years. So all their CapEx this year, or most of it, like for the beginning of a construction, is not going to show up until 2028. So they have to think that the party is going to keep continuing until then. And that's why TSMC is probably the most nervous, where maybe Microsoft, Amazon, Meta, well, I'm forgetting the other Alphabet can maybe slow down faster. Hmm, who knows?
yeah. I'm just kind of stuck in no man's land with these companies. I don't know what. Well, Microsoft has always it's felt a little expensive to begin with, but like Google right now, it basically puts this massive question mark on a business that was otherwise like so easy to own. And I guess at least with Google, they've got very easy ways to monetize it. But like, it's bizarre to me that if Google didn't have all this capex, I think it might still trade at a similar multiple.
Yeah, maybe.
But people, wouldn't you think investors discount it because it's like, and I'm saying this for Google, but it applies to Microsoft and Meta and stuff. It, wouldn't you think the investors would be concerned by the capex spend and like give it a discount on the multiple because of that?
Yeah, yeah, I agree.
Would you buy
It's
any of the big tech stocks today?
I'd buy Amazon. That's it.
Speaking of headcount reduction, 16,000 layoffs. You see that this morning?
I did. I did. They have so many employees still from the 2020 2021 hiring spree. I think their corporate headcount was like 300,000 across the world. So when you see a number like that, and it was 30,000 uh, in total because this was part of the plan from October, I think was 14,000. Yeah, I wonder what divisions they are. And I saw they're shutting down the Amazon Go stores. I think that's a good sign. That was kind of a road to nowhere. But then another thing I saw is they're starting to test grocery stores that are hybrid delivery centers that are twice the size of a Target. Yeah,
That's massive.
that I know. Seems too big to me, but we'll see.
I mean,
We'll
if they're
see.
hybrid
I mean,
delivery
their whole
centers,
thing is Anthropic.
yeah. Speaking of, maybe we can talk about that now. Uh, it, Amazon has a massive investment in Anthropic, and as I was looking at this, so we talked about this last week on the Power Hour, but Anthropic, OpenAI, SpaceX, they all have like rumors about potentially wanting to go public, and the
All
valuations
over
are getting,
$500 billion. Yeah.
yeah, the valuations are getting extreme. The Anthropic, I believe, actually raised money earlier this year or planned to raise money at a $350 billion valuation and was like the round was oversubscribed. So it sounds like they're going to be raising at a $350 billion valuation. Amazon, with their massive stake, I think it's 15% stake in Anthropic, is going to get a big increase in GAAP EPS because the mark to market on their uh, investment portfolio. As I was looking at that, I saw Zoom also has a big stake in Anthropic. And, well, it's not big for Anthropic, but it's big for Zoom. And I assumed because Zoom stock was up 18% in the last 5 days because apparently some investment bank wrote a note mentioning the stake in Anthropic, and I realized the world just didn't know that Zoom, I guess, had a stake in Anthropic. Like a bunch of investors never knew that. I guess I honestly didn't, but apparently the stake was made or the investment was made and publicized in 2023. So this isn't new information. It was they've had a stake since 2023. It was like a $50 million investment. Today it's estimated to be worth between $2 to $4 billion. Last week Zoom had a market cap of 16 billion, so potentially 25% of their market cap was in
And it
this.
could be higher.
It could.
I think their EV is well below that too, at least according to fiscal. And Zoom's market cap now is 24 billion, so it's gone up quite a bit on this news,
Yeah.
especially as Anthropic, I think, raised their guidance for revenue for this year to something like $50 billion, which is quite insane. That the number could be wrong. I don't have that in my notes, but it's interesting. That's for sure. I saw someone say that if you're not long Zoom, you're short Anthropic. Could be true.
Yeah. Honestly, this might have been
Maybe
one of
that's the
the
best way to play it.
that might have been one of the best ways to get for public market investors to get exposure to Anthropic if they wanted to buy it because you're probably buying. I'm guessing it couldn't have been that expensive Zoom on a cash flow multiple prior to this because they've been kind of bombed out. Maybe I'll double check here on fiscal, but I
It's
assume you're
12,
buying.
12 times.
Yeah. Okay, so it was probably about 10 times last week. You're buying Zoom at like 10 times cash flow and getting this massive stake in Anthropic alongside it. And I looked. Apparently, they also have a stake in CoreWeave.
Yeah.
Zoom does. $175
Well,
million valuation, roughly.
less
They also,
optimistic about that one, but could be worth something.
well, I mean, I guess that one's easier to mark, right? It's easier to get rid
Oh
of.
yeah, true, true, true. Yeah, maybe we'll think about a divestiture. You know. But what else do they got? Perplexity.
They own some Perplexity. I'm not sure the value on that one. But I guess my question is, and honestly, we're probably going to see next year. I would guess we see a whole bunch of big, like EPS surprises, like gap earnings surprises from mark to market assets on these AI investments. And this quarter, not even next year. I bet you'll see it with Amazon. You'll see it with Zoom. You'll probably see it with Wix and their Base 44 acquisition.
You know who invested in Anthropic really early? Through his defunct company, Sam Bankman-Fried.
No
Fried,
way.
Freud, Fried. Yeah, he's sitting there in prison, like, God, once I get out, once I get this pardon, I'm
Didn't he
gonna,
end up
I'm
making
gonna be
investors
worth a lot of
whole
money.
from
Yeah,
the
they did.
private?
Yeah.
I think it was because of a lot of his, like his investment fund.
Well, they invested in Robinhood, which has done well. They invested in Anthropic, but I believe it was also because of the recovery of the price of Bitcoin mainly and other
Okay.
cryptos.
I guess my question to you is, how do you feel about public companies having these big VC funds?
If they're good at it, that's good. Some stuff strategic. You could look at strategic investments from someone like Amazon into Rivian and things like that, where you can have a relationship for your business or one of your cost centers. But some companies are good, some companies are bad. Zoom seems to have at least an early track record that's good. The best by far. And people, know I love this company, but Google. Google Ventures has been phenomenal. I think they own 8% of SpaceX. It might be diluted at the IPO, but that could be worth $100 billion at the IPO. I don't know if it's worth $100 billion, but it could be marked at $100 billion this year. It feels things are getting exciting.
Google,
Is it the
yeah,
blow off top? It's hard to say, but things are getting fun.
yeah, honestly. And I guess you could make the case that for Zoom, like for big tech, it makes sense. There are strategic reasons to give the EV company $8 billion or whatever. It gives them capital to invest in their fleet, which ultimately helps you, and then you sign like whatever an actual business deal with them as well. And I think you've seen that probably in some of these circular AI deals also. But
Well, yeah, in Nvidia and Core, we've had some. I'll say some dirty. It's dirty. It's dirty stuff. There was a new one. It's a few billion of, yeah, but I don't have the numbers in front of me, but I read it in the paper, and yeah, well, maybe Nvidia sees it optimal to keep CoreWeave alive, even if it costs them a lot of money to do so.
yeah, and I keep thinking like, why wouldn't? Is it a bad sign that Zoom would rather do this than invest in their own business? But
It couldn't have
they
been
got
that
they
bad,
got much
right?
better
50
returns than
million.
investing in their own
Yeah,
business.
they got a lot of
Where,
cash flow. Still buying back a lot. Yeah.
yeah, I guess for a company like Zoom, I think where are they going to put it? They've tried to expand the product suite and they haven't really been that successful. I mean, okay, I guess I shouldn't say that. I haven't followed it that closely, but the their core business seems stable. And if you feel like you've got a home run investment in the private markets, I suppose you should take it. We've gone a little long on this here, though. Do we want to talk Tesla earnings? Former big tech.
Sure.
Actually, is this big tech
Sure.
again?
Yeah. So, somewhat in the subscriber chat on Substack, which people should join, it's completely free. They asked, "Well, can you hit the big three tech companies?" Meta, Microsoft, and Tesla. It's like big three. I see two big tech companies and a mid-sized automotive company, but that's just that's just my eyes. The report is
Hey,
interesting as usual. They have a lot of
by
commentary.
by market cap,
By
he's
market
not
cap, it
wrong.
is top 10. Yeah, it is. It is top 10 for sure. I'll say one thing with Tesla is that it's so covered by so many people that they look at every little detail. They're trying to look through like different business filings. Ooh, they're about to launch here and there and there. But sometimes we get to look at the forest instead of the trees. And I think annual earnings, Q4 earnings are a good time to do that. If you look at the full year numbers, automotive revenues were down 10% on the year. Other revenues are growing in the double digits, but much smaller businesses. They are, I mean, they're not significantly smaller, but they are smaller than the automotive business. Gross profit was down 2%, so you have a little bit of a margin recovery there. Operating income was $4.3 billion. Company, this is the lowest level. They generated in 2021, 2022, 2023, and 2024 higher operating income in all of those years. They're at 1.1 million full self-driving subscriptions. That's a lot on the roads in America. I saw that maybe that software is getting better. Lemonade, did you see this? Lemonade's offering a discount
Oh yeah, yeah, yeah.
if you that seems like good marketing for Lemonade. Who, yeah, I've been completely wrong on that business. But 1.1 million full self-driving subscriptions, what would you say per subscriber's worth today?
I have no idea. How much does it cost? Isn't it like
Oh
five
yeah,
grand for an?
no, they eliminated the one time.
So it's okay. It's just on a monthly or annual or
Let's hit the Google machine. Monthly subscription of $99.
well,
What do you think?
what's the
Let's say
lifetime value
10K.
of a Tesla itself?
Uh,
Or
you
what's
probably
the
say 10 years. 10
lifetime
years.
in years? Yeah, maybe people
10
own it for
years
10 years. I
for
think
an
you could
average car,
mark
maybe
this at
10.
like, yeah,
10K.
lifetime value, $10,000.
All right. So right now there's $10 billion worth of value. And I know they call it full self driving. It's really driver assist at the moment. Well, the market cap's $1.4 trillion, Ryan. So It's 10 billion, worth $10 billion. Maybe they can get 10 million people to join on this. But back to the earnings, they
Is
talked about
this
huge
what
increases
their
in a.
hold on? Is
Go
this
ahead.
their services and other revenue? I assume.
It would be, yes. That's
Okay.
included in there. Services is also the charging stations, things of that nature, and then there's energy, which is all energy generation.
Okay,
But
makes sense.
all
Continue.
right, okay. Let's keep going. They talk about huge increases in AI capacity, AI infrastructure specifically for them. They're also investing $2 billion directly into XAI, which again, there's so many complications here. It's very, very hard to get to everything. They're investing in a lot of battery manufacturing capacity. When I look at this though, and they're supposed to be launching the Tesla semi truck and the Cybercab in full production. They're supposed to be expanding production, but I'm just confused how free cash flow is positive while operating margin is down, even though they are entering a large capex cycle. You have R&D for things like Optimus, which is mentioned plenty of times in the quarter. It confuses me how that's possible. Just given the slim margins and look, you see Meta guiding for over 100 billion. They may have neutral free cash flow next year or barely positive. It just I don't really understand what's happening there. And per usual, it's a lot of the vague technology promises in the deck. I was reading through it, trying to get any hard facts. The stock is trading up after hours. Kind of hard to say why that's happening. Where the conference call with Musk is probably going on right now. He usually holds court, kind of has some points he wants to say. But the only other thing I'll look at is the market cap right now is $1.4 trillion. There's still some major SBC dilution coming through. And even without including that, we're trading at 333 times trailing earnings. Feels like Groundhog Day with this stock. Each quarter they go, don't worry, don't worry. The next few quarters we're ramping. And then you get a couple quarters later, don't worry, don't worry. Next few quarters we're ramping. And I feel like we've been doing this for the last few years.
Yeah, I mean, despite the different business lines, the FSD, the energy generation, storage, this business still revolves around sales of the car. Like full self driving revolves around sales of the car, obviously. Um, it accounts for 75% of their revenue, automotive sales. Optimus, sorry, it does not contribute to the top line yet for the believers. But it, that, if you look purely at automotive revenue, it's a pretty concerning chart. Like demand's down quite a bit from highs. And
Deliveries are down. Yeah.
you've seen, obviously, it's a different market, but like BYD, for example, deliveries continue to grow. And it becomes more competitive. Electric vehicle deliveries across the board probably continuing to grow. Like in total across all the other companies that have created EVs now. So
It's hard
I'm
to find the bull
cynical.
case. Yeah.
Yeah, it is hard to find the bull case at $1.4 trillion market cap. And
Well, yes, yes. Yeah.
if
And yeah, go ahead.
you
Go
could,
ahead.
like, FSD is looking like a pretty good business. It's looking like services to Apple's iPhone, honestly, if you think about it
Ooh,
in
not
that
not that
analogy.
profitable. No way. Once it gets to 100 billion in revenue, maybe, maybe.
Sure, but like if you compare it to like software revenue to hardware revenue, it seems like it's on the trajectory that
Fair.
services was 5 years ago. And it is something that hopefully as it gets better, it will cost more for customers. If you're a Tesla bull, I think that's kind of the thinking there is there's pricing power. The I would like that story. I could buy into that story. Like I'm probably never going to own Tesla, honestly, just because my gripes with Musk. But if if I were a bull, I could buy into that story at the right price. But we're so far from the right price that it just doesn't seem likely. How big? Let me phrase it to you this way. Is there any price where you would own Tesla?
Probably not with the leadership. No. I mean, clearly it's a good brand. You can't deny that. But no, and look, there's just I don't like companies that self deal. I mean, they're clearly giving $2 billion to XAI because XAI needs the money, and the return on that is very well to be determined. So things like that, I don't like. If like, here's what I'll say: I could understand the bull case when automotive deliveries were growing and they were taking market share, but now that that's disappeared, you're in a very fragile spot. I just have difficulties finding where the ROI is going to be. Where if you're at $1.4 trillion market cap, you probably need a path to at least 50 to $100 billion in operating earnings within a decade, probably 100 billion if you're going to discount that properly. Where is that going to happen if full self-driving matures? Okay, sure, you could be doing a couple billion in operating earnings, but eh, like where how is that going to affect the market cap? It ain't you. The analogy to Apple makes sense, but it's not $100 billion in revenue, probably with $40 billion in earnings. They're nowhere close to that.
No.
So
If someone looked at this just with a sober eye, like didn't know who Tesla was, I think they'd be lost on why it's priced the way it is.
if I was a finance professor, I would do that. The blind resumes. That would be a fun one to do
Yeah.
for classes.
Value
You see your
this
biases.
value this company for me without knowing the
I
company.
would probably
I
just get
like
into
that.
arguments with I would get into arguments with the students that are like, "I'm up 200% on Tesla. What are you talking about?" And that's probably what I would do for an
All
hour.
right. Yeah,
But
you fail them.
we have questions from the chats. Tyler says, "What do you guys think happens to Tesla in a bear market? Do you think it will remain a meme stock, or could it knock Tesla down to a permanently lower plateau?" I think it's going to be a high beta stock. It probably crashes farther than the market. There is a lot of maybe not reflexivity. There's a lot of capital in the Musk empire that's a bit, how do I say it, leveraged to all of this stuff. And I'd be curious what's going to happen. The other one here, which I hadn't thought about, do you guys think Tesla is improperly accounting for depreciating leases where the loss of the $7,500 tax credit will cause used Tesla values to decrease beyond what was accounted for in the lease? That's logical. I'm not sure if they are. I can't prove anything, but that does seem logical. There's going to
I
be
have
an
no
automotive
idea.
analyst that can do much better. I have no idea. Yeah, automotive analysts will do much better work, but
The one thing I've noticed with
seems logical.
Tesla is that trying to get into the accounting trickery and the nitty gritty hurts more than it helps. And it tends to have very little, like throughout Tesla's history as a public company, people have been very right, cynics
On accounting
about
trickery,
some
yeah,
of the accounting trickery going on, and it hasn't mattered for the stock. So
yeah. They eventually pull the rabbit out of the hat.
yeah, and I kind of think now at this point, especially if SpaceX goes public, there's so much money in the Musk empire that he can kind of move stuff from place to place,
That's what
uh,
he's doing. The
that he can
XAI,
prop stuff up. Yeah,
SpaceX and
100%.
Tesla are both investing in XAI. That's look, $2 billion versus the size of Tesla is not that big of a deal. But I could there's been rumors of SpaceX acquiring XAI, which remember merged with Twitter slash X. It's all confusing. What if they all merge together?
That was a Josh Wolf
SpaceX and
theory
Tesla.
from a while back. Josh Wolf had this theory that it was just all going to be end up being one company called X. It'll be
I wouldn't doubt
Tesla,
it.
and the theory is like from the sun or from the space to Earth, it
Okay.
spans the whole
It would be
gamut.
quite a story. It would be quite a story. Here's the last question I have on this company. How many years of kind of the same thing of promises, but the financials are treading water, does it take for the stock to actually go down?
I don't know. I just feel like it can keep going on.
Forever, forever. At some point it ends.
If it's just stable like this, I could just see it him finding a new way each quarter to like keep people happy.
Forever? The carrot can dangle forever? Oh, come on. I don't know.
I said this
We'll
3 years
see.
ago,
We'll see. That's what I'm saying. Yeah, well,
and revenue's down.
at some point though. I know at some point it's gotta. At some point it will end. It could be 5 years from now, and who knows? Maybe they will pull the rabbit out of the hat. But it does feel like Groundhog Day. All right, ASML last
Yeah,
earnings here.
let's do
The
it.
big boys. This is turning into a big tech company. Record bookings, 13 billion euros, gross margin above 50%, operating margin above 35%, EUV system sales revenue of 39%. They authorized a new buyback program, which might be dangerous at their valuation, but we'll leave that at that. Service
Authorized.
revenues.
Important word there. Authorized.
I like it when Wix authorizes $2 billion at a $5 billion market cap, but I would have liked them to do that after my research report was finished. But back to ASML. Their services revenue has grown by 18% since 18% annually since 2012, which is just a really nice part of the growth story. And if we look at the valuation, I think any listener would kick themselves that they didn't buy this thing. The EV to EBIT went from 20 in July of 2025 to 40 today. Stock's gone on a massive run.
Yeah, should have I should have paid more attention. The Can you guess the average price of an ASML EUV machine in
The high NA,
2025?
the high NA, or the just just EUV on average.
Just EUV on average in US dollars.
Is it US dollars? 300 million.
Awfully close. $284 million.
Hey, this
That's
brain works
insane.
sometimes. I think the high NA ones, which is the updated version, like I don't know why it's called high, but I think it helps with more advanced manufacturing. Though those are pushing 400 to 500 million.
How do they have a financing arm? I feel like they should.
No, their only customers are Intel, Samsung, Micron, uh, TSMC, SMIC. They all got the money.
Yeah, it's true. So Intel, they're
It's kind of
basically
like the
selling to the
companies
U.S.
buying
government.
Boeing plans.
Yeah, yeah, that's true.
Yeah, yeah, that's fair. Yeah, did you see Boeing? They're back a little bit. Things
600
have
deliveries
stabilized.
this year. 600 deliveries.
Yeah,
They
it's not bad. Not bad.
are on the right path. They're getting back to those 2018 levels prior to the max crashes and COVID. Um,
The golden age of Seattle will return.
well,
Maybe.
I think a lot of the jobs are
We'll
relocating.
see.
The golden age of Boeing
Yeah,
could return
for
without Seattle.
in Charleston, South Carolina. Yeah. The yeah, they're interesting, and I think it proves that that company, when you have a manufacturing person running it, it does a lot better compared to a finance person. But anything else on ASML? Was
No, it is. If you were ranking the best moats, would you put it number one?
in the world?
Yeah, might be,
No.
right? No? Who's above it?
Man, it's high. You can argue. You can argue a lot of things.
Yeah. I mean, I
Is it
used to
higher
make
than
the argument.
TSMC?
Well, I used to make the argument for TSMC, but I've had people smarter than myself explain that they are, they're not alone. They're just ahead. But ASML stands alone, right? I mean, I don't know anyone else that's selling $300 million EUV machines that take three airplanes to ship. I mean, they are
That's
kind of
fair.
a bottleneck. But no, I mean, I guess it's subjective. Maybe Hermes kind of a different different moat altogether, but could be up there.
No, they come on. There's other ones out there. There's plenty of other ones. Should we talk Michael Burry and
Starbucks?
GameStop? Did you read
Start?
this?
I didn't
No.
read this. I did I wanted to
Starbucks is
mention.
boring.
Yeah, it is. It's actually in 100% in no man's land. I it's a business I want to like that I just can't get behind. It had decent comp sales, but I kind of might be a Brian Nickel doubter.
But he's probably gonna do the best he can.
Yeah,
What's gonna happen to this business? They're gonna get bigger? I don't understand. But you didn't read this Michael Burry 8,000 words on GameStop.
no.
It's a bit strange. He's a unique man. But he is long GameStop. I think. I think. I should definitely go read that to make sure he's actually buying. I don't know if he set a price target lower, but either way, he's attracted to the setup at the right price. Says he knows it's a bad business, but he believes in Ryan Cohen and the cash shell holding company that has essentially been formed. Ryan Cohen is the runs GameStop now. GameStop, not GameStop. GME now has a bunch of cash warrants and convertible notes. These get converted to shares at around $30 for GameStop share price or above, which would raise your quote book value per share out of thin air using financial engineering. Again, this is what Burry is saying in his lengthy report, not me. Burry is arguing that if GME falls to $20 or into the teens, you are buying as a simple bet on Cohen's capital allocation. Is he getting too cute here? Maybe it's a bit of a contrarian take because everyone hates GME for fundamental analysis. Because if you're, yeah, people like us go, I'd never buy it. So it's just gets discarded and no one analyzes it. But I feel like you're just getting too cute. You're betting that Cohen's going to do the right, maybe not the right thing's the wrong word, but turn into a Buffett-esque, Berkshire-esque shell conglomerate. And a lot has to go right here when you're kind of just trading at net asset value with a declining business. Mm, feels too cute.
There has got to be easier ways to make money than getting back involved with GME. It, it sometimes feels to me like for a guy that sort of builds this persona that he doesn't want to be in the limelight, he likes to do the most controversial things.
Sensational write up. Yeah, exactly.
Yeah. He wants to get involved with companies that are the hardest to analyze, whether it's shorts on Tesla, shorts on Palantir. I wouldn't say Palantir's that hard to analyze per se, but the controversial ones. When you would think there's stuff that's like less followed that he could be making money in.
Right. I think it's Nvidia, not Tesla. But
No, I mean way
either
back
way,
when.
your
Didn't
philosophy
he
stands. Way
have a
back when,
short
yeah,
like
sure.
a few years ago?
Maybe. Although don't quote us on any of this. Yeah, it feels too complicated to me. I think I have a nice rule of thumb where if you have to write so much over a pitch, like for a stock pitch, then it's too complicated to make sense and it's too many things have to go right. Yeah, I like a lot of different opportunities. But I felt since his newsletter is very popular, it's obviously GME is an extremely popular stock. It was worth spending a couple minutes on. Should we talk? I'll give you the order here because we have 12 minutes or 10, 12 minutes or so. Silver and gold and dollar devaluation, small cap of the week from a listener or a bubble watch. What one do you want to go first? These are all my topics.
Let's do the small cap of the week. Eat our veggies here.
Okay, this is from Cade Invest on Substack. I'd say go check him out. I believe he has his own newsletter. If you need a small cap of the week, consider Vital Farms. I'll give a quick elevator pitch. Vital Farms is an ethically sourced egg producer. Contrary to every other player in the egg industry, Vital Farms does not own its own farms. Rather, it works with small family-owned farms and sells those eggs under one unified brand. Selling eggs in the store, you probably recognize the branding if you saw it. Not to the store, what other eggs producers do. However, the stock price is driven in the short term by social media posts about what its eggs contain, and one recent incident was when a lab found linoleum in Vital Farms eggs. That can't be good. Actually, I don't even know. No, the next section here says, however, the market overreacted as linoleum has a place in the human diet. They expect $1 billion in annual revenue by 2027, meaning they trade at roughly 12 times 2027 operating income if margins stay put. Finally, they have $145 million in cash, which is roughly 10% of their market cap. Thank you for your consideration. Nice sign up there, like a Truth Social post. You know, the brand seems good, but it's still eggs.
Hey,
It's really
these
that's really what holds me back.
I was thinking the same thing. I read the pitch there on the notes, and it is kind of an interesting pitch. I love when like consumer scandals happen. I don't know, it kind of gets me more interested, but check this out. I am about to share my screen for all the listeners. Total revenue has grown from, let's go 2020. It's grown at a 30% annual rate over the last 5 years. Operating profit, $80 million
That's nice.
dollars over the last 12 months. And you said what, $1.2 billion EV? I think it's at like 14 times operating income. I, I I am interested, and I do recognize the brand. I will admit I don't have expertise in the egg industry by any means. Uh,
Well, remember when prices were soaring? I feel like I've heard the pitch that they're a little more insulated from the cyclicality of the normal egg prices because they go for these local farms, so they're always going to be priced at a premium when we've seen egg prices just balloon and then crash, kind of like a nice cyclical industry, same as cocoa and what else? Well, cocoa is also chocolate, coffee in the last few years. It feels like a solid brand, but I just can't. Where's the moat? Maybe if you were really confident on management, capital allocation, and the growth trajectory and price stability, if you're confident in those four things, that's what I'd want to check out before getting interested here because valuation looks okay.
yeah, yeah, the numbers look good. I am going to pull up a chart here, Brett, that will lead us to our next segment. This here is the 1 year returns of the iShares Silver Trust, up 300%
Oh
over the
yeah,
last
SLV,
year.
right?
Yes. What is happening?
I will try to figure it out. I have someone in the comments that says having a great month because of gold. I'll be talking about gold too. 21% of the portfolio. Hey, it's been a nice run for metals here. Yeah, you can't deny it. The Well, let's talk about silver first. It's up to $113. It was at $30 at the start of last year. Ryan mentioned hundreds of percent in the last year or so. I guess silver. I was trying to look up reasons why this is happening, theories why this is happening. Silver is much more illiquid than gold. It can swing wildly, and apparently, silver is used in AI infrastructure. And the theory is that we're going to have a shortage, which is driving price momentum. And at the same time, China also enforced export restrictions. So there's this narrative out there, people are driving the price, and then it becomes a trading tool where people are day trading it. I saw the volume on SLV was just skyrocketing. With silver, I'm sure it takes a while to get mines online, and gold and silver mines are notoriously the liars with a hole in front. What's the Mark Twain quote? A mine is just a hole with a liar in front of it, right?
I
Something
don't
like
know.
that. A hole in the ground with a liar on top. It's something along those lines. Either way, there's a lot of gold and silver mines that talk about mining and then don't actually do much. But I'm sure the cure for high prices will be high prices where there's enough silver out there in the world and more will be mined at this higher price. Uh, but in the short run, it felt like something that, yeah, it totally makes sense what happened. I mean, you kind of have almost a short squeeze mentality, and then you have supply getting restricted by China. It's quite interesting. Now, gold's a different story because it's purely on debasement fears. It's purely on people scared of dollars, fiat currency, stuff like that. And now in this month, gold has broken out. It's up to about $5,300 an ounce. Apparently, China is buying up a bunch of gold, and our old friends, haven't heard this name in a long time, Tether. Welcome back to the party. They are in any bull market you could hope for. They are buying 1 or 2 tons a week, about 2% of global demand as a backing to its stable coins. They also launched a gold backed stable coin of some regard, although I get confused on all this stuff. My question though is right away, if the price of gold collapses, doesn't the collateral behind the stable coins get wiped out? I'm just asking questions. Now, at the same time, you have dollar debasement fears. The dollar index has the lowest level in years, but is nowhere near what you would call a collapse versus any historical average. And there have been a lot of talks from the U.S. administration about being okay with the dollar going down in value. They're not going to intervene here, but they would also actually like currencies such as the Japanese yen to revalue, kind of similar to what happened in the Plaza Accords of 1985, to make the dollar cheaper for exports. Or, for example, if you go to a country like Japan, you'll find that even though it's the same, first world country, stuff like if you're paying in US dollars, stuff like food is half the price, which doesn't really make sense. Now, switch that to manufacturing for a company like or a country like China, Japan, or countries around Asia, then you can see that it puts the United States at a disadvantage in that regard. So there's incentives for why they would want the dollar to go down, and maybe people are seeing that. That's why gold is skyrocketing. And then at the same time, Bitcoin is still below $90,000 USD. It is not rising along with gold and silver. My thought, there's a lot of stuff here. If you're a stock investor, keep looking for stocks with international exposure or just international stocks in general. You may have holders of, just for example, if you think the dollar's going to go down, I'm a Mexican airport guy, that their earnings will be higher in US dollars if by 10% if the dollar goes down by 10% versus the Mexican peso. It's just that simple. There might be some hedging in there, but you can think of it like that. And as we learned from Lee Lu in our study overview of him, he added to his framework in the later years. You want to maintain purchasing power in the place that you're spending money. And this is something I think a lot of people are thinking about. You also probably are going to have potentially people holding U.S. treasuries that are international buyers worried about dollar debasement, because if the value of the dollar goes down versus their currency, well, if you buy U.S. treasuries, then you get that 3% interest, but the dollar went down by 10%, you actually lost money. There's probably worries from international investors. Overall, I think the incentives are for the dollar to weaken and for probably the U.S. government to lead that. People are speculating that. There's been some commentary from the president and other people around that. It's interesting. It's interesting. I don't own any of this stuff outside of some international stocks, but what are your thoughts, Ryan?
Congrats to everyone who has owned silver or gold over the last 12 months. The I don't know the industry very well. I don't know if there's like big barriers to entry for miners. Like mining silver, is it restrictive? Are there regulatory issues? All that stuff. I assume there's some level of barriers to entry. But my concern, I saw a picture of like a commodities conference. It was I think like a I don't know exactly what it was, but someone took a picture. It said like at the commodities conference, and the place was packed, like standing room only to listen to people speak about this. And the guy said like basically I've never seen it this packed. So many people are showing up, and he was excited about it. But
Isn't
what
that
I'm
just a scene
thinking,
from The Big Short? That's a scene from The Big Short.
right, it's what I'm thinking is isn't that not what you want? Because it would almost be better, I imagine, for silver and gold mining companies or silver and gold investors for this to happen over a more gradual time period, because the sheer speed of this price rise is going to draw capital to the industry faster, which is going to like all cycles, I imagine increase supply, drive down cost. So I I could be wrong again with like maybe the barriers to entry are higher than I think, but I don't see a world where it doesn't start to this massive price increase doesn't become the cure for its own price increase. I guess that's kind of the motto in the commodities world. High prices are the cure for high
That's
prices.
the that's the toughest thing about this market is if you're looking at, all right, I have exposure to silver, I have exposure to gold or something like that. Well, what point do you sell? And it's a lot different than a stock where you can go, all right, I'll maybe sell if it gets to an extreme multiple of 50 times, 60 times, something like that, maybe higher if it's a high growth stock. But you can kind of hold and let the compounding take care of itself. It- yeah, it's tough. It's tough to decide when to sell because you're almost like, all right, 90, 100, 110. It's just arbitrary. It's kind of just like a casino price in your mind. It's just waiting on the horse track. Yeah, I agree. That's the hardest part about this, but it's a good call by everyone that, that has been in on the metals. I feel like when something goes up 100% or 300 or 400% in a year, that's a little hint that you might need to take some chips off the table. Should we close out Ryan with a? I want to read this bubble watch headline. Did you see this?
I did not.
Yeah. Well, this is in the Wall Street Journal this morning. This $14 billion meme stock says it is developing a herbal remedy for autism. Here's a quote. Despite recurring losses, no revenue, and no sellable products, Regencell finished last week with a $15.5 billion stock market value, up 50% since year end, and 126-fold since its initial public offering in 2021. Only spent $1 million in R&D last year, bringing a drug to market can cost significantly more than that. Here's a quote. Despite these precarious fundamentals for all but the most daring traders, Regencell isn't actionable. Shorting it can be even riskier than holding it. Its chief executive owns 89% of the company, meaning the public float is thin, and the stock is prone to explosive short squeezes. Cost of buying the shares for a short sale is exorbitant. If an investor can find someone to lend them. Eventually, the company's going to have to raise money. Oh, well, this is my thoughts. Eventually, the company is going to have to raise money, and that feels like the right time to short, as it will add more to the outstanding float at a larger market cap. It's quite fascinating that this is happening and is allowed to happen. It's a Cayman Islands Corp. It's just Chinese scam company, and the Nasdaq is just saying, yeah, go ahead, list. It's strange to me.
It's kind of puts like the CEO here is sort of in no man's land though, because I feel like I've said that a lot today, but he's basically got $15 billion essentially in paper net worth tied up into this thing. But one of the primary reasons that his paper net worth is that high is because he owns so much of it and the float is so thin. So, like, if he sold it, he's going to drive down his own price. You kind of see what I'm saying? Where it's kind of the trap with like lockup periods post IPO, where it's like, yeah, you could like it's not that bad if you own a small chunk. You can get rid of it. You can realize the value. But if you own 89%, you got to file a Form 4 or whatever, announce you're selling. You're going to have to eat some drawdowns.
He's not going to be worth $10 billion for. He's not actually worth $10 billion. He might be on paper for a year, but they better pull some miracle thing out of the hat here. Yeah. All right. Well, we're going long. Ryan, anything before I close things out for the listeners?
Nope. I think that's going to do it. I'll let you take us out.
All right. As a disclosure, we are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan Irony podcast guests may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for tuning in. And we'll see you next time.